Well, the wonderful thing about what's going on with artificial intelligence in particular is that the cost of innovation is collapsing. Our AI training costs are dropping 75% per year. AI inference costs 85 to, if you believe DeepSeek, 95% per year. So we think we are on the lookout for more innovative companies popping up in the rest of the world. We believe the market is going, in the U.S., is going to broaden out and reward some of the companies that have lagged badly.
Cathie Wood, known for her bold investment choices and strong belief in groundbreaking ideas, has always considered Tesla the star of her portfolio. But something surprising just happened that has Tesla enthusiasts scratching their heads. With the highly anticipated robotaxi event set for June 12th, Wood's ARK Invest has been quietly selling off millions of Tesla shares over the past few days, even as the stock started to bounce back. That's right, Cathie is reducing her stake right before a major event that could completely reshape Tesla's future as a leader in self-driving technology. Now, don't get us wrong, Tesla is still one of ARK's biggest holdings. However, these recent sales, especially so close to the robotaxi announcement, hint at one thing. Cathie might not be expecting a huge splash from the event, at least not right away, but here's where it gets really interesting. While she's been cutting back on Tesla, she's also been actively buying. Over the last few months, ARK has either started new positions or added to existing ones in several fast-growing companies. In this video, we'll dive into 3 of her top picks. Is Cathie shifting her focus from Tesla to the next big opportunities, or is she simply riding the ups and downs of the market? Either way, you'll want to discover which 3 stocks Cathie Wood is betting on right now and what that could mean for your own investments. Let's kick things off with the first stock Cathie Wood has been buying big, Nvidia Corporation. And it's easy to see why. While some investors were worried about a supposed slowdown in AI and missed sales in China, Cathie spotted something most others missed, a prime chance to buy. Nvidia isn't just the backbone of today's AI systems, it's quickly becoming the complete central nervous system for the global economy powered by AI. Did you know that Nvidia started out making graphics cards for video games before becoming the AI chip giant it is today? This pivot shows how adaptable and forward-thinking the company is. Despite recent limits on chip sales to China, Nvidia's latest earnings report blew past expectations, raking in a massive $44.1 billion in revenue. That's without the full $2.5 billion they could have earned from China. And here's the best part. The company still expects up to $53 billion in revenue for the July quarter, proving that the demand for AI chips is incredibly strong. But Nvidia's growth story isn't just about graphics chips anymore. They're building an entire AI ecosystem. Their NVLink switches brought in $1 billion in sales last quarter. Spectrum-X Ethernet is on track for $8 billion annually, and network revenue jumped an amazing 64% from the previous quarter, now hitting $5 billion. Plus, huge deals are popping up worldwide. Saudi Arabia's humane plans to buy over 200,000 Nvidia AI GPUs, which could mean $15 billion in sales. The UAE is reportedly looking to snag 500,000 units. Cathie Wood isn't swayed by fears about China. She's investing in Nvidia's global dominance in AI. With nearly 100 AI factories being built, each using tens of thousands of Blackwell GPUs, Nvidia isn't slowing down. It's entering a period of super-fast growth. Even without China, Nvidia could bring in almost $292 billion in revenue by fiscal year 2028. And if China reopens, that number could soar to $342 billion. That's why experts believe the stock could hit $225 in the next 12 to 18 months. So while others hesitate, Cathie is loading up, preparing for what could be one of the most profitable AI transformations of our time. And that's precisely why Nvidia is at the top of our list. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or just serious about smarter investing ideas, check out the links down in the description. I have a free gold IRA guide for investors looking for stability and diversification in their retirement portfolio, and a premium investing newsletter you can try for 30 days, packed with market insights, stock ideas, and smart investing strategies you won't find anywhere else. Check them out. They might just change how you grow your wealth. Next up is Advanced Micro Devices Inc., ticker symbol AMD. This company isn't just surviving in Nvidia's shadow, it's positioning itself to thrive right alongside it. and Cathie Wood clearly sees this momentum building. In fact, she's been actively buying AMD shares throughout 2025, with repeated purchases in April and May, showing strong confidence ahead of a major shift in the AI competition. Here's what's fueling that optimism. While Nvidia often grabs the AI headlines, AMD is steadily winning over both minds and market share with its data center and AI strategies. In the first quarter, AMD saw a surprising 68% year-over-year increase in its client business, impressing even the skeptics. More importantly, its data center segment is gaining serious traction, not just holding its own against Intel, but expanding into AI acceleration where the stakes are enormous. AMD recorded $5 billion in AI-related revenue in 2024. While that might seem small compared to Nvidia, it shows a rapidly growing trend in a sector big enough for more than one winner. A key event coming up is an AI Investor Day in June, where CEO Dr. Lisa Su is expected to reveal AMD's plan to expand its AI presence from individual chips to complete rack-level solutions. Plus, broader economic trends are moving in AMD's favor. A recent court decision questioned the legality of tariffs from the Trump era, which could ease pressure on semiconductor exports. AMD's participation in a Middle East tour with U.S. officials also suggests significant international demand and potentially deals that could reshape its global AI footprint. And while Nvidia's CUDA ecosystem remains tough to beat, AMD is building its own software platform, just as the need for diverse AI infrastructure is exploding. AMD doesn't need to completely dethrone Nvidia, it just needs to gain ground. And with investor sentiment shifting, recent purchases during dips show that investors believe AMD has already hit its lowest point. Cathie Wood clearly thinks AMD is on the verge of a major breakthrough. And if the AI Investor Day delivers on expectations, AMD might finally convince Wall Street to reevaluate this sleeping giant. Finally, the third stock Cathie Wood has been quietly accumulating, Baidu Inc. While Nvidia and AMD are making waves in the AI infrastructure race, Baidu offers something different, a powerful mix of market leadership, solid value, and untapped potential, especially within China's huge and rapidly digitalizing economy. ARK started aggressively buying Baidu in March 2025, and those purchases have only increased. Why? Because despite global investor hesitation about Chinese stocks, Baidu just reported earnings that blew past expectations, driven by an impressive 42% year-over-year surge in its cloud business. Here, AI tools like its Ernie chatbot are quickly gaining popularity. But let's not forget Baidu's main asset. It still controls a whopping 53% of China's search engine market. This gives it a firm grip on digital advertising revenue, acting as a reliable cash-generating machine that provides stability and scale. This makes Baidu the primary beneficiary of China's growing digital advertising spending, which is projected to reach $93 billion by 2028, increasing by mid to high single digits annually. Here's what's truly exciting. Baidu trades at only 8 times its future earnings. That's not a mistake. With a 12.5% earnings yield, it stands out as one of the most undervalued major tech stocks globally. And this isn't a stagnant company. Baidu delivered $4.5 billion in revenue and $1.1 billion in net income in just the first quarter alone, all while buying back its own stock and maintaining strong profitability. Yes, there are challenges, like Bing's growing share in China, but Baidu's strong market position, cash flow, and AI-driven growth make it a uniquely appealing investment. And if investor sentiment around Chinese stocks begins to improve, this could lead to one of the most explosive re-ratings in the market. Cathie isn't just betting on American AI dominance. She's also diversifying her bets with China's under-the-radar AI contender. And at these prices, Baidu looks like a value play with long-term rocket fuel. So there you have it. While Cathie Wood scales back her Tesla holdings ahead of its big robotaxi reveal, she's confidently investing in what she sees as the next wave of disruptive innovation, Nvidia, AMD, and Baidu. These aren't just short-term trades, they're high-conviction bets on the future of AI computing and digital leadership. Which one do you think has the biggest upside? Let us know in the comments.